The numbers are in, the market remains strong, but I see changes on the horizon. Hi everyone, welcome to another edition of Mike's Market Update. My name is Mike Rennick. I am your host for this video. We've moved to weekly market updates, but I've got the monthly numbers and I'd like to review them for this video. When we look at the first chart, and again this is year over year, this is the way I used to look at the numbers. Now I find it more appropriate to take a month over month, and we'll come to that in a second. But we look at sales. Sales are down 6% from a year ago. That's much less than what we were seeing in previous months, and you can see that on the chart. The pendings are down 12%, prices up 23%. That again is from a year ago. And days on the market are down 48%. Months of inventory continue to climb. That's the whole secret here. Let's stop for a second. The challenge with today's market, it's been both a supply and a demand problem. There haven't been enough listings. Point blank, sellers have not been putting their properties on the market at the levels that we've seen in past years. Also, the demand is higher. Since COVID started, folks who are working at home and others are finding that this is a great place that they want to spend their days, and they're buying properties down here. So before we get into the interference caused by mortgage rates and recessions and all of those kind of stuff, let's just talk about supply and demand. So some buyers have pulled away from the market because of their frustrations, losing bidding wars and stuff like that. But the good news is the supply is rising, and I'll show you in some more charts here in just a second. The number of listings are going up, and we're seeing that, and that's healthy. We want a stable market that will remain stable in the long run. So let's take a look at that. When we go to the next chart and take a look at more of a month-to-month look at the market, that's what we need to do, and I'm pulling the chart up right now. So when we look at it, the dark green bars are solds. And we look at over the last 3 months, sales are staying constant. So as many deals are getting closed as had been previously. And when we go back into the earlier months and we look in the December and January, or the January and February timeframe, the numbers are significantly higher. That's healthy. Sales are staying relatively constant. When we move now into the for sales, and that's what I want to talk about, since we look at back in the let's say December timeframe, the numbers are going up on the units for sale. That's fixing one of the major problems we've had. As listings continue to climb, the market will move more towards a balanced market, which in the long run is a lot healthier. So in my weekly updates that we do, we see that's moving up on a weekly basis, so that's a good news. Pendings, the red, we'll call it the squiggly line for a technical term, are staying relatively constant. You can see that on the chart there. So it's a good news market, good news story that we have when we start to look at what's happening here. But let's continue on. So are we giving these away because of price, or are other things happening? So when we look at price right now, look at the chart that's on the market. When we look back, I would say January, maybe even December on, price is staying relatively constant. So to get more sales, to get more listings, buyers aren't being enticed, or sellers aren't being enticed by higher prices. In fact, the month of May was equal to the month of April. So more stability in the market, that's a good thing. When we take a look right now at the, let's look at average days on the market. What that means is how long it's taking something to get sold. And when we look at the data over the last few months, relatively constant. We go back into the September time frame all the way through now, days on the market. So we haven't seen where listings are lasting longer. Actually, I think in the data we show next month, that's going to happen. I'm starting to see it in our personal line of business, if you would. But here, when we look again at the amount of inventory, it's gone up significantly since December. We see there's 9/10 of inventory. Now, that's a twofold function. It's a function of part of the sales and the part of the listings that are being closed. But we see that climbing. So the supply side is starting to fix itself. If we take one variable at a time and we address what's happening in the market, we're starting to move into something that's a lot healthier for everyone. The next set of slides, let's take a look at the global market. This is Keeping Current Matters, provides these. I have their permission to show these slides. Let's talk about mortgage rates. That's on everyone's mind right now. Mortgage rates, when we look at the last 5 decades, are still, when we're at around 5%ish, a little above sometimes, we see that there's still money is substantially cheaper than it has been over the past, let's say 40, 50 years, and that chart depicts that. So let's go right now and let's ask the question on everyone's mind. Are we in a housing correction? Are we going to see prices fall? Are we going to see a market shift of that magnitude that we saw in 2008? Well, first of all, let's define a correction. When we look at the data, or we look at the definition, and this is actually, when we look at it, this is from Investopedia, and they're suggesting a correction is a decline of 10% or greater in the price of a security, an asset, or financial market. That hasn't happened. I showed in the previous charts that prices remaining steady at this point. So take a look at a quote from Danielle Hale, chief economist of Realtor.com, and it says the housing market is at a turning point. We're starting to see signs of a new direction, but the ball is still in the seller's court in most housing markets. We still see that here on Florida's West Coast, but it is starting to change. When we look at existing home sales right now, we're seeing in the April time frame, and when it was annualized, it's almost a little bit less than 6 million units, still a healthy number. So what's ahead? What are we going to see when we go forward? And let's look at a quote from Mike Frantononi, a chief economist at MBA, and I quote, "The mortgage rates are likely to plateau near current levels. The financial markets have attempted to price in the impact of the Fed actions over this cycle, and they are likely also pricing in the economic slowdown that will result. Once we are past this rate spike and associated volatility, MBA expects that potential home buyers may be more than willing to re-enter the market." So I've heard that from more and more folks in terms of what's going to happen. They suggest that the rise in mortgage rates will level out, and we may actually see some fallback. When we take a look at the total home sales for this year, and Fannie Mae is coming in at the lowest at 6.1 million, Freddie Mac the highest at 6.9 million. Everything shows that we're still in a healthy market. We look at Realtor.com, and I quote, "Experts don't believe the market is in a bubble or a crash is in the cards," like during the Great Recession, and we all know what happened back in 2008. "The nation is suffering from a housing shortage that has reached crisis proportions at a time when many millennials are reaching the age when they start to consider homeownership as likely to keep prices high." So let's look at, are we headed to a recession? Let's talk about what the economists are saying. So the National Bureau of Economic Research defines recession as the following: a significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in real GDP, which is by definition real income, employment, industrial production, wholesale, retail sales. We know for Q1 the GDP fell. By definition, if it falls in Q2, we are in a recession. But I've shown a recession, I've shown charts in the past, I'm going to bring it out again. Recession doesn't mean a housing crisis. When we look during the past 6 years, the last 6 recessions, we see that in 1980 and 1981, in 2001 and 2020, even in a recessionary period, housing prices continue to increase. We're really familiar with the 2008 Great Recession, if you would, where prices fell, but really the housing market caused that recession. We can have more about that conversation at an appropriate time. So when we look at this right now and we put everything together, it says, when we look at a quote from Shavini Peterson, a mortgage expert, "If you're looking to buy a home, I would recommend you do so even at the higher interest rates, because we have no reason to believe that home prices will stop appreciating. Home values going up is only a problem when you're trying to buy. When you own, it's a gift." So everything points to, yes, we're going through changes, but as the pendulum starts to swing back from a very strong seller's market, we're moving towards more of a normalized market. There is nobody suggesting today that we're going to fall off the cliff. Real estate has always shown to be a good investment. It continues to be so today. I would like to hear your thoughts. There's a link below to my blog. But remember, this is just the beginning. This is the macro look for Sarasota, Manatee County. We need to go deeper into the area that you're going to be either a seller or a buyer, and I'm happy to do that. Feel free to give me a call. My name is Mike Rennick. My direct cell is 941-400-8800. 8735. Thanks for watching.